It's Sunday and I realized I haven't even made the market recap for Friday. So this is the market recap for Friday, the 27th of March, 2026. So this Friday, we ended up continuing dumping, right? A normal Friday typically has TGIF where we retrace back into the range. So I'm gonna explain what I saw and why I went ahead and shorted it as well, rather than looking for TGIF, right? So let's get onto the chart with annotations. Wait, this is the wrong chart. Alright, let's get to the chart with annotations, right? And I'm gonna explain all of this, but let's get to the daily first, right? So on Thursday, we come down and take this low, right? Our Monday's low, our weekly objective, right? As in our bare minimum, our low hanging fruit objective, and then the market, if it wants to, could close back into the range, do whatever, right? And then we could start delivering to these lows throughout next week. As you can see, they had a different idea. They said, you know what, let's just do it this Friday. And that's fine. You can still read it, you can still trade it, you can still see what's going on, right? Well, what's the first indications that we're gonna go to these lows? Well, first, ES hasn't taken that low, and I don't expect an SMT for ES on that low. That's number one. Number two, YM hasn't taken that low as well. I don't expect SMT, right? So we have both of them. However, YM was much, much higher. So it indicated that we could have a large range day, right? What does that help with? Well, NQ, regardless of what we're gonna do today, I have this target, right? We have to go to that low, and what's next to it is this relative equal low, right? That's in case we get animated, right? That's in case we can deliver much, much lower than expected. And of course, I'm gonna need stuff intraday to help me with the analysis. Two, we also have that rejection block, right? And as a main target, normally when I'm looking at sell side and right or buy side or whatever, they typically stop at some sort of fair value gap, right? So I have like think of this as like this is TP1, right? Let's say we're gonna go lower. This would be TP1, right? TP2, TP3, and a final objective, or if you want to think of it, it's TP4 right here. Why here? Because since these highs, I'm saying like, alright, once we create this and we're going lower, my objective was one objective. I've been stuck true to it. That is, well, mainly this, but if we just want to look at it as a long high time basis, is this monthly fair value gap, right there, which will make this kind of a breakup block or whatever, right? For us to continue going back higher, right? So I'm looking at this early manipulation for the year to go higher. Of course, if we go below it or whatever, then hey, this might be a really bearish market and we're gonna start looking at these lows, which right now I don't expect yet, but hey, you never know. Anyway, this is our long-term target, right? And we need to hold this on some sort of monthly basis, right? I wouldn't like us to trade mainly into this part, which would be to me as a balanced price range, right? I wouldn't like us to trade into that. I wouldn't expect price to be much bullish from there. But if we're really bullish and want to hold our ground, right? It's the midpoint of this monthly and basically this daily gap, right? That's what I'm looking at for us to start retracing higher, right? Like we could do this, go higher, come back and again take the low, make an SMT, and then that's what I would expect. We made the low of possibly the year or the low for like these first 3 6 months or whatever of the year, right? So that's my stance. So if I'm aiming there over long term, right, and I'm looking for price to go lower, well, if there's any indications that we're gonna do it in each day, this could have been Thursday, Friday, whatever, right? Like the fact that we can do that, that's what I'm looking at. That's what my bearish stance is, or overall what I expect from the market. So let's head to the 15 minute, and base the expectation on what can we do and what can't we do. Well, you can see that London already made the run to sell side, right? Is this the second sell side? Let me just double check. Yeah. London has already taken this sell side, and because this one is on a wick, technically it's unfinished business, so let's get rid of that. This is our main sell side, and as you can see, after that we expand through it. We don't just wick like here and come back. No, we expand through it. That's one of the signs that we're really bearish. Okay, so now we know that. Let's go down to the 1 minute, right? And let me replay this market open, right? So we can see what stands with all. All right, that's 931, right? All right, we have taken that low. Cool. In terms of ES, what have we done? Well, we've taken that lows. We're taking them lows as well. All right, perfect. Why is YM done? Not even close. Not even close, right? That told me, all right, that's sign number one. There's room to go, right? I don't expect this SMT. There's room to go to the lows, okay? I can expect SMTs with other lows, cool, but that low specifically, no, because that's our weekly target, okay? Like, even if we're gonna SMT or whatever, YM has to reach that low as its weekly target, okay? So, I still don't know if I actually reached it, but that's the expectation, right? So, cool, that's number one. Number two, we open in a very large opening range gap, right? And it's very bearish. So as you can see, these are the quadrants that I've marked up. So what invalidates this whole thing from thumping? Well, there's two things that I'm looking at. One is that 15-minute fair value gap, right? Even in the 1 minute, I'm looking because in terms of buy side, right? If we're gonna go higher, what's the buy side? Well, we have the initial buy side liquidity, and we'll have a London high right there. I wouldn't expect us to go to London high, but hey, we could do it. So again, it's TGIF, and midpoint of that range would be right there. So like, if we want to really animate higher, I would be like new daily opening gap, new daily opening gap, and that's enough, right? And of course, in terms of us here, like as an actual trade, I'll just take it to the lower quadrant, midpoint of this open 15-minute Civi, right? And I guess the high, right? The initial buy side liquidity. Like that's all I'm asking for. I don't care about anything else. What makes me bearish? Well, if we don't even bother to take this high, and mainly if we don't bother to visit the lower quadrant in a large opening range gap, it's one of the signs of a large range day. Regardless if we have 2 billion buy side liquidity, which we do have, PM high, London high, the AM high, we have so much buy side liquidity that we could head towards. But if we're bearish, one of the signs is that we can't visit the upper quadrant, right? I mean the lower quadrant, but in this case, in let's say the first 30 minutes of the trading, right? Once we do that, we're not showing any willingness, then you flip the bias automatically to follow this. This is bearish, then the whole day you would not look for any longs, regardless of how good it looks. You're going bearish, right? Because the market is going to keep dumping most likely the whole day. Or regardless of is the longs, like let's say there's a long setup, it'll be short-lived, but the bearish plays will play out. I'd say 8 times out of 10, right? If you just follow this logic. So I'm going with the probability, but I'm initially looking to be long, right? So now let's get rid of replay and have the annotations, right? So here we'll create our first presented fair value gap suspension block. I believe it was a suspension block, right? But that's the first presented fair value gap. And I'm watching mainly right here. I'm watching mainly right here what we're gonna do, right? So we take the initial sell side and it seems that we're gonna go to our initial buy side, right? So, one sec. So, we go to the initial sell side, and I'm watching if we're gonna go to the initial buy side, right? So we come down here at 943. That's permissible. That's fine. We come back to this gap, and then we start going higher into our first presented. I see this candle. That's fine. This candle. That's fine. And we're heading into 950, and we're not closing. This candle closes all the way lower like that, visiting this gap, which I would not expect. I want this to act as a breakaway gap. Remember, I'm still waiting for the confirmations. We're getting way too close to 10. So I take a short, right? I market short this because now I'm expecting, okay, the signs that were lower again, and I'm seeing why I'm at this current moment so far, I'm expecting lower prices. So that's why I take the short, because we're expecting the first presented fair value gap. We're not having anybody's close above, and we have this reaction. Right, cool. That's the first short. Not a really good short. That's why I enter on um just one entry, and I'm looking to add once I have a confirmation below the change in state of delivery. Right, as you can see, there's nothing here that says there's change in state of delivery. But if we go ahead and go to the 15-second, that's what I was watching price on at that current time. This to me is a change in state delivery, and then once we go wick below here, this candle technically should have wick below here or whatever, then we open up and we visit this gap, right? That had to deliver. In a perfect world, that had to deliver, and then we'll just continue lower and lower and lower for the day. There's no reason for us to come back up. But as you can see, we didn't have that scenario, right? And I'll let you see what that does for later on price action. Regardless, I take the short all the way to the liquidity, and you'll see that it lines up with a negative. Let's put normal. All right, that's wrong. Right, right there. So that was a perfect time for me to exit, even though I know we're gonna deliver much lower. Right. So this is on my funded account. Done. Right. I'm done for the day. Right. That's my short. Easy. You know, as you can see, it delivers in 1, 2, 3, 4, 5, 6, 7. You know what I'm saying? Less than 10 minutes and we're done. We're out. Right? Cool. That's it. Turned it off. But this bugged me, right? Because I know this should have delivered. So I told myself I'm gonna have a limit order right on it to deliver to the next objective, right? Which would be the rejection block, right? As a minimum low hanging fruit objective. As you can see, what does price come to later? Because it should have, right? It has to. Like, there's order to these things. Just like here, when I was watching it, where it has to come to this high, it should have came back to this inversion, right? And as you can see, that wick doesn't. So once price comes all the way back, and I know it's like not the cleanest, but hey, you can't expect that much precision. The stop loss will still be intact. Then they deliver to these highs, right? We had this whole run, blah blah blah, and then it gets overshadowed by a 1 minute candle. It's the same concept that, like, if you're following price properly, there's things that it should do and things that it shouldn't do. And that's why I can't chase price if it doesn't deliver to what it's meant to deliver, because most time it will deliver to it later. And as you can see, that was my, I guess, demo trade for the shorts, right? From here to here, and you can see that's 11:34. I don't trade at that time, so that's why that was a limit order. I said forget it for the TP. And you can see we deliver it to it in the lunchtime for some reason. And then if that's what happens, that means we already done the lunch macro. Then that makes PM has the chance to go all the way to targets. As you can see, look at that reaction once we get to it. And then we'll close inside it, which means we're still bearish. So that's the market recap. I'm guessing if page show, if we put this is around here, again, stop loss right there. That's the first trade. You can see that's how I like my trades, hella fast. And then the demo trade was there, the stop loss right there, and that's the second demo trade. I mean, no, funded trade, demo trade, whatever, same thing, same concept. I mean, 200 points, 134 points, whatever. So it's a calm Friday, but for TGIF is my main thing is you would expect it to come back higher, but if it fails, and because if you just look at the whole week, Monday we go up. Where's Monday? Alright, Monday we go up like this. Wednesday and Tuesday and Wednesday we basically consolidate, and then Thursday, once it start delivering lower, you can expect Friday to also deliver lower, right? There's examples of this I can show you back, but like you could probably find them. But yeah, so just be wary that not every Friday is gonna be a TGIF Friday. I guess that's the main learning point from this, and yeah, you enter however way that you want to enter, as long as you have reasoning behind, what do you call it, the targets, right? So yeah, that's the market recap. Peace out.